All right, how you doing, YouTube? My name is Tajan Witter. I am a day trader. I've been trading for the better part of about 3 years now. The concept that I currently study in the market is ICT, and today I will be going over, what basically happened today in the market as far as indices go. So I only trade US30, SPX, NAS 100. That's the only pairs that I pay attention to. Now, before I proceed, I want to let you know that I am not a financial advisor, right? I am not basically making this channel for you to like take any live trades or anything like that. This is strictly based on what I've been seeing on ICT, and I'm just taking the time out to just study, backtest, and see if I can learn how I can, process this information for the betterment of myself and my people. All right, cool. So let's get into it. I'm going to share my screen. Okay, so now I know there's a lot of noise on my chart right now, but I'm gonna just go ahead and clean up everything, right? And go to the start at the daily time frame. And we're just gonna basically pay attention to what's been going on within price, right? Now, based on what I've been seeing since the start of last year, right? We've been on a huge downtrend. So we've been selling for the most part, right? The market was overall bearish until we got to a point where we took sell side liquidity and traded into what is known as the ICT fair value gap, which I will highlight over here. So a fair value gap is basically what I'm highlighting right here. So from the high of this candle's wick to the low of this candle's wick, as you can see, we only have one candle passing through to the upside, meaning there was no selling taking place inside of this area, this blue shaded area. And I'm gonna label that as my sell side liquidity. All right. So what price will want to do, fair value gaps acts as a magnet within the market, and price will basically gyrate back to it for smart money to reaccumulate. And as you can see, we hit it perfectly right here. Now, within that process, I noticed that we took out a major swing point right here in the form of sell side liquidity as well. And I want to keep this as simple as possible. And I'm going to show you why I came up with basically what I saw today in price and why price will continue to buy up. Right, so we have that short-term low that was taken in the form of sell side liquidity. I'm going to just label it as is. So SSL means sell side liquidity. I'll make it so that you guys can see it a little bit clearer. Go. So boom, we have sell side liquidity taken from this major swing low. We have sell side liquidity taken from these lows over here. And then we have a fair value gap in the discounted area over here. Perfect. Now, as you can see, we had a shift in market structure. Price broke out of a short-term high, came back down into a discounted area, the same fair value gap to reaccumulate, and then we bought up. Now, once we bought up, what took place? Buy side liquidity right here, 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 all along this whole area, buy side liquidity was taken till we had that breaker structure up in this area. So we have buy side liquidity taken. Boom. All right. So now what I'm seeing is a dealing range that is created from this low to this high, right? And we can refine this within this area, within this trend as well. Now, the way that I'm going to refine it, I'm going to look for the nearest major swing low within the trend, to basically look for my area of premium and discount that the market could potentially come back to. And that is going to be from this low right here, which filled this gap. So for me, that is an intermediate term low, which means price should not go back below that area. All right. We have a short-term high right here that's taken. So I'm just basically making a note of everything that I'm seeing in the chart right now. And over here, the reason why we got this sell is because of this tiny fair value gap inside of this area. Cool. And I mean, if you want to use this larger one over here too, all right, we're just going to use this larger one. From here to here. That's another area where smart money will look to offset long positions. So this is a premium fair value gap right here. Cool. So as you can see, from here to here, this low to this candle's high. Now, the reason why I use this swing low, I want to use the low of the lowest closing candle, the wick of the lowest closing candle, to the high of the highest closing candle, or the wick of the highest closing candle. So I'm not using this wick, I'm not using that wick, I'm using the high of this candle. Or as ICT teaches, it's better to sometimes, utilize the bodies of the candle as well. So let's go ahead and we're going to just utilize the bodies. And I'm going to use my Fibonacci setup right here. All right, cool. So as you guys can see, I'm going to drop a line on my 50% to show you guys, all right, this is equilibrium. So equilibrium basically is a line that delineates whether if the market is in a premium area or discount. So anything above 50% is premium, anything below 50% is discount. Now we traded down into discount to 78.6% right here. Now I'm going to remove my Fibonacci real quick. And I want to highlight something. So within this area from low to high, we have this short-term low right here that price traded to. And it might have taken it, or let's see, might have taken it. Once we drop down to a lower time frame, we can look a little bit closer. So let's say realistically, we came back down here. Anybody that had trailing stops or their sell stops below this area got taken, and then price traded higher. All right, taking out these short-term highs as well. So highlighting these areas in the market and what price is telling you is very key, because it allows you to be in sync with basically the overall order flow of the market. All right. All right, so from discount to premium to discount back into premium. All right. And we're just going to be, like I said, we're going to go over this one day on what happened. All right. So continuing, I'm going to zoom in into this area a little bit. So we came to an area of consolidation after we took sell side liquidity from this low, this low, this low, right? We traded higher, consolidation. And on the lower time frame, you can see right here, I'm going to zoom in. Right here, we took the lows, like we literally swept the lows and traded higher, creating displacement. So displacement is basically a quick acceleration in price in one direction that creates a fair value gap. And we have that right here. Another one. Boom. Now, this previous day's low was taken, which was also the low of that fair value gap. And then we have our previous day's high right here. Cool. So sell side liquidity taken from the previous day's low. We traded down into the fair value gap on the daily time frame. We traded higher and closed here on the day. Cool. Following day, open, traded down into the previous day's high, traded up, taking out buy side liquidity from that same last down candle. So now we have a bullish order block right here from this one day. Following day, same thing happens. We open, we trade down to the open of this, or to the high of this previous day. We traded away from it, taking our previous day's high. And now what I'm going to do, I'm going to use the replay tool, and we're going to take this candle off. We're going to basically look at how we could have capitalized on that move for the day, utilizing ICT's concept. So what I'm going to do, I'm going to transfer my two lines from the previous day's high right here and the previous day's low. And if I know that price is going to be bullish, or if I see that price is overall bullish and I'm looking for buys, then what I want to see is price open, trade down to an area of discount, and then potentially trade away from it. So what I'm going to do, I'm going to start dropping down to a lower time frame. And I'm going to basically start mapping out my time in which I'm going to be looking to trade or capitalizing from the market. So initially, I'm going to go to my 4-hour. We see the previous day's high, previous day's low. And basically what I'm looking for, I'm just looking for fair value gaps, order blocks, somewhere in the market that I can potentially look to enter. All right, give me 1 second, guys. Alrighty, so back to what I was saying, guys. Sorry about that. All right. So now what I'm seeing on the 15-minute, we have a huge displacement from this candle right here, creating this fair value gap. And we can see that price did trade into it a little bit and then traded away from it. So what I'm gonna do in the time being, adjust my lines, and I'm gonna just go ahead and highlight midnight, because that is the price where manipulation, or the time in which, manipulation usually comes in the market, or that's the end of the Asian session per se. We're just gonna let that play out. All right, so midnight. Cool. Pause it right there. And that's Friday, midnight open. We have this huge area right here to pay attention to, but we're not gonna just utilize this area like that per se, because as you can see, if I should drop my fib on this, goes from the bodies of the candle, this is not really in like a deep discount enough for me. Reason being, this is like a broad area that price could just come inside of here and just consolidate for the most part. Cool. All right, so I'm gonna go down one more time frame. All right, here we are. So now what I'm seeing, as you can see, this is the 15-minute fair value gap, and I'm gonna note it as such. So fair value gap. 15-minute. And then I'm gonna highlight these two right here that I see on the 5-minute time frame. Here. Just put that as an imbalance so it can be something, I guess, like a different color. And right in here. And I really like this one too, because like I said, this is more in a deep discount. So I would label as a discounted fair value gap. Excuse me. And if I should drop my Fibonacci on it, it would be from low to high. So I would look from a retracement to go below the 50% of this dealing range into this area, which is perfect. All right. So in my case, my point of interest would be the very first line right here, or even the high of the fair value gap for my potential entry. But we will just let price play out and see what happens. All right. I mean, obviously we saw what happened, but I'm just gonna go over what I saw today. All right. Me add the rest of my lines real quick. So I'm gonna add a line for 8:30, 8:30 open. Midday for New York lunch hour. So from midday to 1, there should be no trading, as ICT states. And then 16:30, where that's the true day close. And we're just gonna let price play out till New York. Because regardless, around this time, I mean, if you want to stay up for London, I'm usually asleep, so I'm just gonna let price play out. Oh, before I do that, so let me go over the Asian range real quick. So the Asian range is from 7 p.m. in the evening to midnight. So from the high to that low, that is basically where liquidity is built up during that consolidation. And I have a little indicator that I use, which is the ICT kill zones. That is basically easier for me to highlight the high and the low. That's all I use it for. So we have the Asian range high, Asian range low. We drag it out to midnight. From 1900. All right, so 1900 is right there. Guess this is a little bit off. Let me turn that off then. So from 1900 to 12 midnight, that is my Asian range. And I'm just gonna highlight the high and the low as well. All right, so I have my Asian range high. I have low. And then what's another key thing to highlight would be the open of midnight. In this case, I'm just gonna use another ray to delineate that. So from the open, and I'm gonna put it to about midday. This is gonna be my New York open. So if you're bullish, you want to be buying below the open of midnight. All right, we're gonna let price play out till 8:30. All right, so here, this is very funny because like Retail would see this as prices, breaking the low. You would try to sell. Then you get your money taken right here. Price trades up into this fair value gap, and then we start selling off. All right, so right here, this fair value gap, and then it's gonna purge the high of Asian range. We are. Then we get a huge displacement, like price literally during London session rushes down into discount. All right, boom. So 830. And it's so funny that price initially it purges the low of Asian range. We have a false move or a run above the highs, taking buy side liquidity. And then price basically boulders down, creating that Judas swing that takes us to our point of interest. So all I'm looking for now is signs of bullishness once we trade into this area. So I want to see a high, a low, price trades lower, taking out that short-term low, trades higher, and then we can recapitalize on that newly formed order block, potentially a fair value gap to take price higher. All right, so right now on the 5-minute, we already have a short-term low and a short-term high. Let me highlight the short-term high. And we're gonna highlight the 830 open as well. And then I'm going to 1 minute. And we're gonna be watching what price is doing. All right, we go above the 830 open. Short-term low. All right, so we have this really short-term low created right here. So price is like consolidating between this little range, right? Now, like I said, we have a consolidation. Now, what I want to see is price trade below this double bottom, trade away, so we can take price higher. All right, boom, right there. So, I mean, a lot of times, since if I should go back to using my Fibonacci, once price takes this low out and hits my entry, then I would take a buy. And TradingView has this new feature where you can actually like live trading while you back test, which is kind of cool. I just kind of learned about it. But yeah, so I'm gonna take a buy right here. And then we're gonna watch price, and I'll show you how you can basically assess your risk from this area. All right, guys. So I'm gonna zoom in on this. This is funny because we have it on a really so price is fractal. Everything that happens on a higher time frame can happen on a lower time frame. And what I'm seeing right here is we traded into that higher time frame discounted fair value gap over here, right? This is this gold shaded box, and I'm gonna go back to it over here so you can see where we at. All right, so over here, all right, price traded into that fair value gap, and we created a short-term low, short-term high, price traded down a little bit more into it, taking out that low, and then traded higher, taking out this high, right? And in that doing that, it created another really small displacement right here, right? So I'm not gonna lie, that's a little bit aggressive, but in some cases, if you know what you're looking for and the conditions call for it, you can buy that. You get me? I said. So in this case, my stops would be going right below the low of that candle, which would give me about 7 points. And if you're bullish, like I said, you will be targeting the previous day's high. So I'm going to go to the 5-minute. And previous day's high is around here. But in this case, let's just pay attention to the high of Asia. And we're going to let it play out. And that's it, guys. Safety.